G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're going to take a look at the bullish case for Bitcoin and what it may look like. We're also going to have a look at a bearish case, and we'll also have a look at what's happening at the moment and whether we're going to fall out of this wedge, which we're right on the point of at the moment. So if you enjoy this content, please stick around and let's get right into it. Okay, so the first thing I'm going to do is grab this piece of price action from here to here, and we'll overlay that over where we are at the moment, just to give us an idea for comparison. Now you can see that we are approximately in a similar space, maybe a little bit ahead of where we were back here in January. So that just shows how much momentum we've had, that we're actually moving up faster than we did way down here. Now, this red line here is the 50-day moving average, and as you can see, we always bounce off it. So what I'll do is I'll just draw where this 50-day moving average would be, just to give us an idea of what it might look like. So that's what it might look like if we follow this exact same price action that we've followed in the past. And if we do that, it could bring us somewhere up to that 70K region if we get to the very top. Now, as you can see, every time we get up, we also always come back to the average. We don't just keep shooting up. So this is one likely scenario if we do copy that same price action that we had back in January and February. Now, before we get too excited about this happening again, let's have a look at the monthly chart. Okay, so this big spike here is January, and this spike here is February, and then we went into March. So you can see that there was a bearish divergence with the volume. It was going down as the price was going up. Now let's have a look at what's happened in July and August so far. So the volume is lower than it was over that entire period. In fact, this volume is somewhere, it's not completely low, but it's higher than it was in October, but it's lower than it was in November at this point. And now in August, and we are only 10 days into August, so August is currently down here. So the volume doesn't look too exciting from a monthly perspective. So that is something to keep in mind. Okay, now let's have a look at the other scenario. If I just grab this point here to say, let's just grab this point, we'll be conservative. This is what might happen if we tend to roll over at this point. So we might come down to this level, and if that happens, the 50-day moving average will go right through like that. And this is what we have seen in previous bull runs. We go above the 50-day, we go below it, and then we go above and below it. And that's happened in every single bull run. So that is another possible scenario that might happen. Another scenario is that we go up a little bit higher first before we come down. So let's just grab one of these. Let's go from here to here, and we'll move this into place. So if this particular scenario happens, it could bring us up to, this is showing around the $53,000 mark. And that does line up with a few points that we've got here that could act as support or resistance. So what I'll do, I'll just mark those in. So there's definitely a point here, and there's definitely a point here, which really shows us the bottom of this head and shoulders pattern. So this is really the neckline. So, and that brings us up to about $49,000. So it is possible that we get up to somewhere around this point and then turn back down again. Now, let's have a look at what's happening with the price at the moment. So I'm currently on the one-day chart, and you can see that we are forming a rising wedge. And a rising wedge has a 68% chance of falling to the downside. So let's zoom in a little bit. We'll go to a 4-hour chart. So you can see within this rising wedge from here to here, we also had an ascending channel, which we started going up in, and then we fell out of the channel, we got kicked out, then we got back in, and then we got kicked out, and now we got back in again. And so you could argue that we're still in this rising channel, but we've also formed this rising wedge, which can't be ignored. So there is a very high likelihood that we will fall out of this wedge. Now, that doesn't necessarily mean we're going to fall way down here. It might just mean we're going to have a bit of a pullback before we get back into the wedge and back into this channel and keep going up. So there's various possibilities. However, what I did notice, if you look at this wedge and look at where the wedge is converging at the top, if I draw a line we can see that the top of this wedge does line up somewhere around the neckline of this head and shoulders, so somewhere in this region here. So let's just mark those areas just to give us some possible areas of where Bitcoin may reach to. So what we can see is that this wedge is converging in this little section here that we just looked at, which is around the neckline of the head and shoulders. So there is some confluence that perhaps Bitcoin gets to the top of this wedge, somewhere up here, and then turns around. And it will either go up or it will either go down. And we don't know at this stage which way it's going to go. Okay, the last thing I'd like to take a look at is just the number of green weeks. So right now we're on a weekly chart, and we can see we've bounced off the 50-week moving average. And you can see right now that we've had 1, 2, 3, and we're currently in our 4th green week. Now, if we look back over the history of Bitcoin, we can see that we've followed similar patterns in the past. So back in 2017, 2018, you can see here we had 1, 2, 3, 4, 5 green weeks before turning around and dropping down again. And then in 2020, we had 1, 2, then we had a slight red week, and then 3, 4, slight red week, slight green week. So it's a similar kind of very bias towards the green side. And then if we go back to 2014, you can see here we had a similar pattern where we had 1, 2, 3, 4 with a particularly large green week there. And there's, you could also argue, some other green weeks. So we have seen a similar pattern in the past where we have several green weeks in a row before turning over and then crashing back through the 50-week moving average. So finally, let's take a look at a monthly chart to see if that gives us any other information as well. So you can see now we've had 2 green months going up after having 3 big, or we had 3 red months going down. Now in 2017, 2018, at this point, we had 2 red months going down and 1 big green month going up, followed by another red month going down. Back in 2014, we had a couple of red months here in a row. So let's call that 3, followed by 2 green months, one which is really quite large. So we're still in that very similar vein where we've had a couple of green months. In this case, we only had 1. In this case, we've got 2. But in those occasions, we did turn around and go down again. So the question is, do we do the same thing, or was this just a correction and we continue going up again? So what's my personal opinion? And my personal opinion doesn't really matter, but looking at all the data and all the evidence, I'm trying to weigh up all the pros and all the cons for whether we're going to go up higher or come back down again. Now, I'm thinking we have followed the same pattern before. We've had several green weeks in a row. We've done it here, we've done it here, and we've done it there. And all the indicators at those times have said bullish. Now, combined with the fact that our monthly volume is quite low, and we're following the same pattern that we've followed in every other cycle, my feeling is that we're more likely to reach a lower high and turn around than we are to go up. So from my point of view, it's all about the probabilities, and the probability of going lower, I believe, is higher than the probability of going higher. And finally, the last thing I'd like to take a look at is where we are in this current cycle compared to other cycles as measured from the macro market corrections. So you can see the video up here to see more about how I came up with this chart. But essentially, we are about 2.6 years at this point into the 4-year macro market cadence. And we can see that in previous occasions in 2017 and 2013, by this stage, we're halfway through the macro market cadence and we started making our way down despite the macro markets continuing to make their way up. The macro markets then corrected at the very end. So from this point of view also, I believe we are following a very similar pattern. So I hope you enjoyed that video. We won't really know what will happen next until it actually happens after the fact. But all we can really do is look at the probabilities. And at this stage, I'm still biased towards the downside based off the previous cycles and the evidence we've seen before. But there is still a chance that we can go higher again. So we have to keep an open mind to both scenarios. Okay, so that's all for today's video. So you can follow me on Twitter at TechnicalTimCR1. I'm really enjoying producing this content, and I'm getting some really good comments from people, and it's really motivating. So yeah, please keep them coming. So until next time, my name's Tim, and cheers.